As expected, the Bank of England's kept interest rates on hold at 0.5%. But of more interest was the speculation over its quantitative easing programme, the amount of money the government would inject into the economy, effectively printing extra cash to give to the banks in order to get them to lend more. It's already used up £125 billion of its £150 billion pot, and today we learned that figure will remain unchanged and it won't add any extra yet. With interest rates so low, there was little other option but to use the strategy to try and stimulate the economy. At the time, Governor of the Bank of England, Mervyn King, was confident it would work.
Any policy measure has a high degree of uncertainty. I believe these measures will work, though I cannot tell you exactly when, or indeed the scale of the purchases we may need to carry out in order to achieve our objective. But our objective is clear, it's to see an increase in the supply of money in the economy so that we can see a level of spending return and a beginning to economic recovery in this country.
But there are now questions over whether all this extra money is actually having an impact. A recent study shows nearly a quarter of people are still struggling to get a mortgage as banks tighten up lending, and growth figures have proved worse than predicted. The economy contracted 2.4% in the first 3 months of this year, the worst quarter since 1958, and almost equal to the entire fall experienced during the 90s recession. So the green shoots may have a little way to go before they're fully out, and as for whether quantitative easing will go some way to speed up that process and beat the credit crunch, the jury's still out.